A very good afternoon to one and all present here. I welcome you all for the 14th session of the Yashashwini live webinar series. For today webinar, we have two speakers, one CA Saroj Maniar ma'am and CA Preeti Chheda ma'am, and four mentors. Just to give you a brief introduction about Saroj ma'am. Saroj ma'am is a highly accomplished chartered accountant and former managing partner at Manyar and Manyar Chartered Accountants, which merged with CNK and Associates LLP 15 years ago. With over 30 years of experience, she now serves as a partner at CNK, specializing in direct taxation and advisory. She actively contributes to professional forums, including the taxation committee, her contribution for the tax audits and budget publications. She is also a respected speaker and author, featured in leading publications and forums. Additionally, she advises charitable trust on taxation matters and serves as honorary treasury and secretary of Bombay International School. Saroj ma'am, it's over to you now.
Hello.
Hello. Hello, Saroj ma'am. It's over to you now.
Thank you. Thank you very much for the warm, kind introduction. Can you hear me? Can you see my screen?
Yes, we can see your screen.
Can you? My video doesn't seem to be on. Yeah.
Yes,
Yeah.
now
Yeah.
it is there.
Yeah. So thank you to the committee. Thank you for the kind introduction. And it's my honor, it's my pleasure to be here amongst, all equally accomplished women and, very happy to address women because I think women are a special, lot. And without women, I don't think anything would have been possible in this entire universe. And always a pleasure to see more and more women joining the profession and continuing in the profession because whilst joining the profession is one step, but to stay committed, to continue, to not give up despite having to juggle many things, and continuing and having that quest of learning and kind of growing in the profession is always very wonderful to hear. And it's wonderful to hear stories of so many women being present. So coming to the topic proper, I will just share my screen. Today we are in the month of June, and this is the time when one is getting ready to file all the tax returns and all of that. What I'm going to discuss today is just one aspect of the tax return. It's not the entire tax return, it's just one aspect, but it's a very, very critical aspect of the tax return. And today with globalization, a lot of our clients, a lot of our associates have exposure in foreign countries. They would either, have some relative and have some connection, and they would either have some, business connection outside India, some investment outside India. So it's very important to understand what is the responsibility of every assessee when it comes to filing the tax returns in respect of all the assets or any income which is coming from outside India. Now, before I start, let's just, look at what the background is. I'll take you all through the background and then the specific disclosures and some case studies. And then we'll look at what are the penalties and what is the importance. Why is this disclosure so paramount and so critical? So the background is, we've been reading about a lot of, not only in India, we've been reading internationally about a lot of high net worth individuals having businesses in lower tax jurisdictions or even the largest corporates, whether it's a Apple, whether it's a Google, whether it's a Starbucks, we've heard about them setting up entities and setting up parent companies in low tax jurisdictions, whereby a lot of taxes is getting evaded, so to say. And internationally, all the nations are grappling with it. All the nations want a fair share of their revenue. So there is a lot of action which is being taken at internationally. And obviously, India is not the one to be left behind. India is, in fact, I would say, in the forefront of it. Uh, because a lot of actual activities, whether it is manufacturing activity, a lot of activities are in India, and there is a lot of revenue leakage. So the government thinks. And because of that, there have been regulations. We've introduced FATCA. There have been common reporting standards, which a lot of countries globally have adopted. Sorry. And India is in the forefront. India has also adopted these common reporting standards, whereby different financial institutions of jurisdictions give information to their tax authorities about any foreign holding. So, for example, the Indian tax authorities get information from the financial institutions of foreign tax holding of, say, US residents, tax holding of UK residents, tax holding of other international residents. And that information the Indian tax authorities will exchange, will give to those respective jurisdictions. And similarly, it receives a lot of information. In fact, the amount of information that India is sitting on, the amount of data that the Indian tax authorities are sitting on is just phenomenal. I mean, I guess we can't even fathom the kind of information they have. It is only how they crunch that information, how they use that information is the issue, which is why there are times today we get notices of some assets or some information or some transaction that a assessee has done 6 years back and 8 years back. So there is a lot of information. And India is obviously a signatory to this automatic exchange of information. We have this treaty with 90 plus countries. India has set up this foreign assets investigation units, the FAIUs that they call. And these investigation units have been the ones who have been sending notices to various assessees asking for information about their foreign assets or asking for sources or asking disclosure. As long as the disclosure has been made, everything is fine. In fact, the foreign asset reporting has been introduced way back in 2012. For the first time in assessment year 2012, 13 had a schedule in the income tax return to give details of foreign assets. And wherever one was a signatory in a bank account and details of foreign income. At that point of time, there was no penalty. It was more of a disclosure requirement. Thereafter, in 2015, the Black Money Act was introduced, and there was a scheme where there was a kind of a VDS scheme, as they colloquially as it is called, wherein one could declare their foreign assets, pay a certain tax and penalty, and kind of come clean. So it was more like a opportunity for disclosure, for declaring whatever undisclosed foreign assets one had. And thereafter, if the department comes to know of a foreign asset which has not been disclosed, there are very, very stringent penalties. Whilst the tax rate is 30%, the penalty is up to 300%. So, which means you pay a total tax on that foreign asset of 120%. So with that background, let's just look at what is the applicability and how does one go about it. Also, again, sharing our own personal experience and our own practices that we follow. What we do, especially for the returns of non-corporate entities, returns of individuals, and especially the high net worth individuals, we do obtain a declaration from all of them. We do, kind of make them understand the importance of all this information, because often a client would come and say, look, I'm giving you details of my income. You can cross-check it with your 26 AS and AIS, TIS. What more do you want? But it is then our duty and our responsibility to explain to them, look, in addition to this, you have to give us all these disclosures. If you don't, these could be the consequences. So that becomes very important. The one important thing is, so this FA disclosure is mandatory since 2012-13. They've only increased the types of disclosure, the kinds of disclosure, so as to match it with the information that they have. Earlier in 2012, probably they did not have access to so much information. Now, this disclosure is applicable only to residents. It is applicable to residents and ordinary residents only. So, if an assessee is a resident but not an ordinary resident, he or she does not have to disclose foreign assets. He does not have to fill in this data. This disclosure of a number of assets. So we will come to all the schedules. There are about 10 schedules. We will come to each of the schedules separately, but primarily and broadly, the disclosure of the assets has to be in respect of the calendar year. And the details of the income, sometimes for the calendar year, in some cases for the entire year. And of course, in the return, one has to do it for the previous year. In India, the previous year is the financial year, which is April to March. Why for the calendar year? Why are the assets required to be disclosed for the calendar year? This is because the information that the government is getting under the automatic exchange of information is for the calendar year. So they want to match that. So which is why we have to again explain to all our clients and to all the associates that you need to give us data of 31st December. When we are filing the returns for AY 24-25, we have to look at the data for the period 1st January 23 to 31st December 23. The numbers, of course, have to be reported in the Indian currency, and there are norms as to at what rate the conversion has to, and at what date the conversion has to take place. So where it is the peak balance, wherever the reporting, for example, for banks is for peak balance, it has to be the date of the peak balance. Wherever it is the details of the investment, it has to be the date of the investment. And wherever it is closing balance, example, for banks and all that, bank balances, it has to be the conversion rate as on the date of the closing balance. Now, again, going back to basics, 139 provides for who all have to file their return of income. And typically, one has to file your return of income only if your income is above taxable, or even if it's below taxable, if you're claiming a loss to be carried forward or you're claiming a refund. But even if you don't have to file your return, you don't have a loss, you're not claiming a refund, but you have a foreign asset or you have a foreign income, you still need to file your return of income. It is mandatory. That is the fourth proviso to section 139. So that is again something which we may keep in mind. The details of foreign assets are available. Those particular schedules are available only in ITR 2 to ITR 7. They are not available in ITR 1. So ITR 1 is not applicable if you have foreign assets. If you have, because ITR 1 is applicable only if you have income from salaries and other income and house property. If you have any other income, if you have business income or capital gains, you have to look at ITR 2 to, or whatever else, 2 or 3. But if you have foreign assets, you will have to go to ITR 2. And the non-disclosure has penal consequences. Couple of, again, important points as to who all need to keep these provisions in mind. One is non-residents who have become residents in India and they have obtained assets outside India, even if when they were non-residents. So typically when a returning Indian comes back to India for good, for 2 years, he may be a not ordinary resident, but thereafter he will become a resident and an ordinary resident. At that point of time, he will have to look at his global assets and he will have to respond. He will have to give us all that data and consider all that data. Now, there are times you have foreign nationals, foreign expats who come to India and they become resident because they are working in India. If they are working in India for 3 years, they may become resident and ordinary resident, but they are actually foreign nationals, they are foreign passport holders. There is an exception given that if a person is a foreign citizen and that person is on business, employment or student visa, and those foreign assets are acquired by those people, by such residents, during the period they were non-residents. That means prior to their becoming a resident, and there is no income which is derived from that foreign asset, then they do not have to disclose. But if any of these conditions are not fulfilled, they will have to disclose. So this is again another thing. If one is doing returns of expats, this is something which should be kept in mind. Then in recent times, with the LRS, there are a lot of Indian residents and Indian nationals who make regular remittances outside India, either for some investments in some shares and securities or any other funds or anything. Similarly, individuals may have invested under the ODI route. They may have invested in businesses outside India under the ODI route. So one must keep that in mind and have proper disclosures. One very important thing is, again, individuals who are appointed with multinational groups often receive ESOPs, receive either ESOPs or RSUs or any other options from the parent company, which is outside India. So that again becomes a foreign asset, and there could be foreign income also being derived from that. So that is something which needs to be kept in mind. Sometimes one may have received gift, one may have received something by way of inheritance, say some immovable property or something outside India which is received through inheritance. So that is also something which one may keep in mind. Often there are individuals who may be the trustees, if they have set up any trust outside India, they may be the beneficiaries. They also have to disclose. Whilst if the beneficiaries are specific beneficiaries, it is much easier to disclose what is their share in the assets. But if it is a discretionary trust, the question is, does a person even know? Because often a person may not even know that he or she is a beneficiary of a trust. But wherever there is information, this is something which is mandated. Again, individuals who have signing authority outside India, often, the CFO of an Indian company may have the signing authority of a subsidiary company in, say, Singapore or Dubai or anywhere else. Whilst there is no income, whilst there is no asset, but even if the person is a signatory, that information is required to be given. Similarly, one may just be a joint account holder. Say the investments or the bank accounts are in the name of the first holder and the spouse is a joint account holder. The spouse may not actually have any beneficial interest, but still the spouse has to show that, disclose that information. Now we look at what are the schedules. Now there are 10 schedules, 10 different schedules in the ITR. And these schedules are common across all the ITRs. There is a Schedule A, which has 4 parts, which is giving details of assets. And it also asks for details of income for the calendar year. Then there is Schedule B, C, D, E, F, which again are more specific. And in that, whilst there are details of some assets, there is also details of income for the financial year. So there is a detail of income for the calendar year plus details of income for the financial year, which will match with the information that one files in the ITR. So the first one is Schedule A1, which is depository accounts. What is meant by depository accounts? It is accounts with any bank or with any financial institution. So it is your basic bank balances, your bank deposits, your current account, savings account, and all of that, deposit accounts. And there, if we see what is required is country, these are all, this is an actual extract from the ITR. So these are columns which have to be filled in. Now, here, if we look at it, country name, country code, name of the financial institution, address, zip code, all that you will need to get from the statement of the bank account or the financial institution account. The account opening date is also important to be given. Now, practically, a number of challenges that one faces is when one is giving this disclosure for the first time. Say the person has become a resident for the first time, then getting this information sometimes is difficult, but again, very critical. So one has to give this information, and one has to get the client to understand that this information is mandatory. Then there is peak balance which has to be given, there is closing balance which has to be given, and there is gross interest paid or credited during the period. And when they say during the period, here one has to give for the calendar. So this covers accounts held with a with a banking entity or a financial institution. There are times, one may have balances, one e-wallets, like in India, how you would have an Amazon Pay or a Paytm or whatever. So these wallets also, any foreign currency wallets also that somebody has will need to be reported. And interest, one common question that a number of clients have is, why should I disclose the interest over here if it is not belonging to me? If I am only a joint account holder, how can I show this interest? Because I'm not even reporting that in my account. I'm not even reporting that in my return. But one will still need to give the details of interest. Separately, whether this interest is accounted or no, that will need to be, when it comes to details of foreign income, there it will come as zero. And this is a common case in case of all joint account holders. Our personal experience has been, even if there is a question, one is able to explain that, look, I'm only a joint account holder and the actual account holder has offered this interest. The problem is if the account holder has not offered this interest, and whilst you are a joint account holder and you have also not offered, that could create a problem. But offering the interest when it does not belong to you is not required and is not a solution. The next disclosure is Schedule A2. This is of custodial accounts. Now, what do we mean by custodial accounts? Custodial accounts are those similar to a CDSL or an NSDL account that one would have in India. So it is somebody who holds custody of various financial instruments. Typically in US, you have the brokers themselves who hold the securities on behalf of a client. So it would be those brokers account you have in US, you have your 401k accounts, those are custodial accounts. So those are balances that would need to be disclosed. Again, similar information like we saw in Schedule A1. I'm not going to repeat that because this is a factual thing. Now, here also brokerage and demat accounts will be there, the pension scheme accounts, individual retirement accounts, and again, how to disclose the peak balance. Now, peak balance, typically now, if we look at a demat account, now, if we look at, again, I'm relating all this to how we would do for an Indian investment. If you look at an Indian demat account, you may have 10 shares, you may have sold 2, bought another 5, again sold, but you will see whatever is the peak balance and then accordingly show the peak amount and translate it on the date of the peak balance. Again, that is as per the instructions. When you do the translation in Indian currency, you will take the TT buying rate of the State Bank of India. Now, all this information is now very easily available in the public domain. So once you have the date and once you have the balance, that conversion is something that we can do. And for closing balance, again, you will take the TT buying rate on 31st March. We will take the closing balance. When we come to the next couple of disclosures, we'll have some very interesting things as to if you're showing your custodial accounts here, what about the underlying securities? What do you do? Do you need to show it separately, or is it already included in the custodial account and you need to show it? But when we come to that slide, we'll discuss that. So the next class of asset which needs to be shown is again foreign equity and debt. They call it foreign equity and debt interest. What does one mean when you look at the disclosure requirements and the instructions which are there with the income tax return along with the income tax return. There it says like the mutual funds, the AIFs, the private equity funds, hedge funds, all of these are basically what it needs to be disclosed here. So these are basically collective pools, collective investment pools, which need to be disclosed here. Whilst there is also a view that individual shares, individual underlying shares or bonds or any other securities also need to be disclosed here. Most of the people that we know are disclosing the individual shares in Schedule B. We will come to that separate, that separate table B, and we'll discuss why it's better to show it over there. So here one can look at mutual funds, AIFs, ETFs, all these private equity funds. And investment in shares of foreign companies, whilst it's included in the custodial accounts, the question is this, and what is included in custodial is the summary, whether you need to give separately each one, that we will come to when we come to schedule to table P. Now again, what if foreign equity and debt interest is held by wife who's a homemaker, but source of such investment is funds provided by the husband, who would need to disclose? As we discussed earlier, disclosure has to be made by everybody whose name is there, who's a legal owner or who's a beneficial owner. That disclosure is paramount, it's mandatory. Peak value of investment. So when we talk about peak value of investment, the peak value is not in terms of market value, but it is in terms of the total cost. So if, for example, my opening balance is $100, I've made some additional investment of $50, it becomes $150, then I've sold another 70, the closing is 80. So my peak is 100 plus 50, 150. That's how one will take the peak balance. Like one does for loans, how the tax department does the peak balance theory. Then one comes to Schedule A4 of FA, which is foreign cash value of insurance and annuity. Now this is basically the life insurance contracts. In fact, a lot of Indian residents, when they have gone outside India, say on a secondment or on some, job for a short period, often may have made some investment, taken some policy, which is more like an investment policy and not a pure term policy. What is required here is not pure term policy, because in a term policy, you don't get anything back unless, of course, somebody passes away. In case of death, one gets. But here, what is considered is something which is mainly in the nature of investment. So whenever there is an investment policy, whenever there is a policy which is where there is something which is going to come back, then the cash value or the present value of that policy has to be disclosed. Now, if the life insurance policy again is taken by the husband and spouse is a beneficiary, who will disclose? I think both of them will need to disclose. Whilst the wife has not made any payment, the disclosure requirement will need to be made, because the husband will need to make, because he has actually made the payment, and the wife will need to give the disclosure because she is the beneficiary. Now we come to this is we saw A1 to A4. Now we come to B to G. Here there is data. Here there is details of whatever are the investments in assets as well as the income, both for the calendar year and the taxable income which is offered in the return of income. So here, one of the reasons why people prefer giving the data of the shares, which are the underlying securities for the custodian accounts over here, is because they can correlate that with whatever is the income offered. If you look at the earlier schedules, there was no correlation with the income tax return. So here, any investments which are made in shares of foreign companies, and there is some sale of that investment, if there's any income which is offered as capital gains, will be reflected here. Sorry. Oh, and before that, I think any investment in partnership firm or LLP or similar entities, that also has to be disclosed here. Shares of foreign companies. This table also says that you have to give your nature of beneficial owner. Are you a legal owner? Are you a beneficiary? Are you a beneficial owner? This information is also required. In column 8, you have to give income for the calendar year, and in column 10, you have to give income for the financial year. Now, again, when you give income for the calendar year, you are calculating basis a different in a different period. So your amounts may not necessarily match. In some cases, they may match. For example, if it's dividend which has come in the month of September 2023, even for the calendar year, it will be the same, and even for the financial year, it will be the same. But in many cases, it would not match. Again, income for the financial year, you have separate rule. You have rule 115, wherein you have to, for income from house property, there is a different methodology to calculate. For income from dividend, there's a different methodology to calculate. In some cases, it is at the end of the year, you have to look at the TT conversion rate. In some cases, it is the date of the transaction that you have to look at the TT conversion rate. So that is something you have to keep in mind, but that needs to match with your ITR. Then you come to again Schedule C of Table C of Schedule FA, which is the immovable property. Again, this also, if you see the heading, it says including beneficial interest. There also you have to give all the details of the immovable property outside India that one may have. The ownership could be direct, as we saw earlier, that if you have inherited an immovable property outside India, that also would need to be disclosed here. One common issue is whether, an immovable property under construction, whether it needs to be disclosed. Whilst this is not really a foreign tax related issue, this is an issue which one even asks, even for immovable property, which we have to disclose in the Indian income tax return. Typically under FEMA, you are of course not allowed to make a LRS for under construction property, but assuming you have assets outside India and there is some under construction property, there is another residuary clause where you will need to disclose and not under the immovable property clause. Then there is one, residuary clause of any other capital asset that as they call it, a catch-all clause. So any other foreign assets which you may have, which do not fall in the category of shares, debentures, depository, custodian, insurance, etc., that will need to be disclosed over here. So where you have any other right, anything, you will need to disclose that here. But these have to be capital in nature. And examples, the immediate examples one can think of is any ESOPs, any restricted stock units, any crypto, any share application money, any immovable property under construction, any loan given. So right now we are not looking at our FEMA provisions as to whether loans are permitted, but assuming that a loan is permitted, if there's any other foreign asset, that needs to be disclosed here. Then we look at table E, which is any signing authority that one may have. Whilst a signing authority may not really result in any income, there could be some cases where a signing authority may have an income implication also, but in most of the cases, the signing authority may not result in any income. For example, if you are a director in a foreign company, you are a director in a subsidiary of the parent company, which is in India, there may be no income which is really accruing in your hands, but you are a signatory. So that will need to be given. Often what may happen that if the employee who is a signatory in a subsidiary company's bank account and the employee has left, it may be very difficult for him to obtain all such details. So, I mean, before leaving an organization, please ensure that whatever data is required, that would need to be given, that would need to be kept ready. Now, if a person is a director in a company and does not have any signing authority in a financial asset, whether any information needs to be given, the answer is information needs to be given, but not here. There is another place where information has to be given, because if one is a director in any company, that data is required to be given. Table F talks about trustee, beneficiary, or settler. Now, if every year before the budget, there's a spree of new foreign trusts and all that, which are set up by various HNIs and by various families, saying that inheritance tax is going to come. Let us ring fence everything, and let's try and keep some assets in a trust. And when some of the beneficiaries are outside India, one may look at setting up foreign trusts. Of course, a foreign trust cannot have Indian assets. So those are other issues. But assuming that there is a foreign trust set up, the settler has to give that data, whilst a person who settles will just given the money. And unless it is a revocable trust, the settler may not have any recourse to get back that, unless he is also a beneficiary. Having said that, it's a settler still needs to give this information because this is mandated. So if there is any trust which is set up outside India, the data has to be given, details have to be given. Now, again, a question which is often asked is whether the protector of a trust is required to give these details. Now, who is a protector? A protector is basically somebody who's a close family member who the trustees have requested to become a protector, that in case, who the settlers have introduced as protectors, that in case of any dispute or in case the trustees are not acting in good faith, the protector can step in. The information about protector is also given. It is also available, and under the automatic exchange of information, the name of the protector is also disclosed. So the question is whether the protector is also required to be given. So a simple rule of thumb is, if your data or if your information is available in any documentation or is already disclosed somewhere as being connected with that organization, please give that data. Where it is details of foreign assets, it is better to be conservative. It is better to err on the side of conservatism. Having said that, if you have one category of assets, one should not be so conservative as to show the same kind of asset in 3 different categories, because then the tax department can come back to you and say that, look, you are saying you have 100,000 here, you have 100,000 here, you have 100,000, where is 300,000? So that is also something one has to be mindful of. Now, in case of discretionary trust, will the beneficiaries need to disclose? Practical challenges. Often one may be a beneficiary, one may not be aware of it. The question is, what happens in such a case? In case there is a query, in case there is a question, then one will need to be able to prove that one was not aware that he or she was the beneficiary. Then this is the residuary schedule for any other income derived from a source outside India. Now, if you see, all the details of foreign income have been in respect of, most of the details have been in respect of financial assets, immovable property, and the like. There are some incomes like, say, a salary income. If the salary income is liable to tax for any reason, say there's no DTAA or for whatever reason, that would be required to be disclosed over here. Similarly, if any gift is received and that gift is taxable, then that would be required to be disclosed over here in this particular, under this particular table. Now, having completed this FA, we also will need to tie up with the information that comes elsewhere in the ITR. And see to it that there are no mismatches. So now in one place, we have to, in part A, in the general information, one has to give details of disclosure of directorship. Here, whilst one has to give details of disclosure of directorships of Indian companies, please also remember to give disclosure of directorships in foreign companies. Because often one feels that, look, I have already given that information earlier in the foreign assets and the foreign interest disclosure. I don't need to give, but please ensure that this general information is also complete and details of the foreign directorship comes here. Similarly, unlisted equity shares, one will give details of unlisted equity shares of India, but foreign unlisted equity shares will also need to come here. Then when we come to Schedule AL, now this is a schedule applicable for individuals HUFs if they have income exceeding 50 lakh. Now, typically we know that in a number of cases, the individuals do not maintain their balance sheet and they would kind of extract data, they would extract details from different places and combine everything and give. So these details will have, when they talk about immovable assets or movable assets, this would include details of assets both in India and outside India. So whatever data has been given for assets outside India, that should be included here. However, if the details are given of assets outside India where one is only a signatory and not a beneficial owner, then one need not give it over here. Then similarly in Schedule EI, the income exempt due to operation of DTAA, whilst one may have given details of, say, dividend income or details of any other foreign income, but if there is an exemption under DTAA, one will need to give the reference and mention that, so that there is again no mismatch. Again, this is continuing that details of income outside India, and then what are the tax relief if it is exempt, if there is a tax credit available, all of that needs to tie up. If we have, how much time do we have? Hello? Okay, I think we have another 10 minutes or so. So quickly we can run through a couple of case studies. So these are, again, most of these case studies have been made based on our actual experiences and actual cases that we have come across. In this particular case, there are employees who are residents and ordinary residents of an Indian company, but they are granted ESOPs of a parent company, which is the foreign company. The parent could be a listed company, the parent could be an unlisted company, but they are granted certain ESOPs. So what happens at the time of grant? They've received letters of grant. Is there any requirement to disclose? There's no requirement at that point of time because this is not really an asset. During the vesting period, is there any requirement to disclose? Again, during the vesting period, there is no requirement to disclose. But what happens at the end of the vesting period? At the end of the vesting period, this is an intrinsic right that an employee has. So there is an asset, there is an intrinsic right. So at that point of time, one has to disclose that these are ESOPs which are vested. But unless the employee exercises it, there is no value because it may have vested, but unless the employee exercises, suppose the employee leaves the organization after vesting, there could be rules, there could be certain regulations, or for any reason, if the value of the stocks goes down, the employee may not exercise. So then, unless the exercise happens, there is no asset, though there is a right. So only at the time of exercise, this would be this would need to be disclosed in the table B, as we saw details of the financial interest. And if the ESOPs are parked in an overseas trust, and the employees are beneficiaries, then at what point of time they have to show their right. When the ESOPs are exercised, at that point of time, they will have to show. Till the time the ESOPs are not exercised, there is no need to show. Now, similarly, there are different kinds of stock options. There are phantom stock options. There are RSU, restricted stock units. So one will need to see what are the terms, but the moment there is any right which gets fructified, there is any right at that point of time, the disclosure needs to be made. And often these are uh, common things that one misses out. Uh, One of the other issues that we have come across is about this beneficial interest. Typically, there is a lot of information, as you are aware, on this significant beneficial ownership and the ultimate beneficial owner. So, when there are layers of organizations, the intention is to come back to the natural person who is the beneficial owner. Now, the issue is that today, if a promoter of a company, a promoter of an Indian company has set up foreign subsidiaries, 100% subsidiaries of the parent company in different jurisdictions, whilst the significant beneficial owner or the ultimate beneficial owner is that individual, the question is, does he have to report details of all the investments? Because he would be reporting the details of shares in the parent company, but thereafter the parent company has got layers of subsidiaries or a number of subsidiaries. Does he or she have to disclose all that, all those details? Similarly, if the Indian shareholder opens a bank account and incorporates a firm outside India where the shares are not mandatory, what is the requirement? Is it a financial interest? Though he is a beneficiary. So ultimately, there is a disclosure requirement as a beneficiary. We come to the next case study. Yeah. Now, in the third case study, what happens is Mr. A has acquired shares of listed foreign company in Jan 23, and the dividend is earned in February 23. So when one is filing the income tax return for the assessment year 23-24 or 24-25, what would be the requirements? What would be disclosed and what would not need to be disclosed? Now, suppose the return is being filed for assessment year 24-25. For assessment year 24-25, as far as the dividend earned in Feb 23 is concerned, will not need to be reported because that is already come last year in the actual income tax return, in the income earned for the previous year. But in the income earned for the calendar year, he will need to show, because when we are filing the return of income for the assessment year 24-25 for the assets, we need to give disclosure of the calendar year. So if the shares are acquired in Jan 23, the details of assets will need to come in that calendar year. Now, sometimes what happens is, if we take a reverse case, and in that case, the shares have been acquired in the earlier year, and the dividend has come in the financial year, shares have been acquired in the calendar year. In that case, what happens is, in the details of the calendar year, you will not have the corresponding income, but in the ITR, you will need to show the income. So the reason why I'm repeating all this is, you will need to ensure that for income tax, for making the payment of tax, you have to look at financial year, but for making the disclosure, you have to look at the calendar year. Then we come to case study 4. Here, A and B are shareholders of ABC, which is an Indian company. they are mentioned as the beneficiary in the bank account opening of XYZ and EFG. And ABC has made investment in XYZ. XYZ develops a software which it required technical support from US and set up a new. So basically, there are layers of subsidiary, and they are all operating subsidiaries, so which is permitted. So the question is whether they are supposed to show whether ABC is required to disclose investment in XYZ as a shareholder and as a beneficial owner. As we saw earlier, we mentioned that in the case of an individual who may be an ultimate beneficial owner, should he give only level 1 or should he give all levels? Now, all levels is not practically possible. As long as one is giving the immediate, the first level of foreign entity, in my opinion, that should be sufficient compliance. Because once you are giving details of the first level of foreign entity, that takes care of all the subsequent levels. Whilst there could be a question, but there is an explanation which is possible. We come to what are the penalties. And as I mentioned earlier, why this is very important, why giving all this information correctly, accurately, in a timely manner is important, is because there are very, very stringent penalties under the Black Money Act. Now, Black Money Act interplays with the Income Tax Act. There is no specific penalty in the Income Tax Act, but the Black Money Act refers to the Income Tax Act and refers to the income tax return. So wherever there is any asset which is not disclosed and the income tax department is has come to know or has become aware of that asset, the income tax department can levy a penalty which is equivalent to 3 times of the tax. Similarly, if the income has been, if there is any income which has not been accounted or there is any disclosure which has not been made, you may be in a position to explain the nature of the asset. But if you have still not disclosed that asset, there is a penalty of 10 lakh rupees. In fact, there are a number of judicial pronouncements also which have upheld the levy of this penalty. Whilst there are one or two cases where they have said that in case of a bona fide mistake, that if the disclosure has been made in 3 years but has not been made in 1 year, it's a bona fide mistake and penalty should not be levied. But in most of the cases, the tribunals are taking the view that this provision has to be read, very strictly, and it's a stringent provision. So similarly, these are various other penalties if the data, if the information is not correctly filled in. So that is very important. In fact, even if the data is inaccurate and part of the data is given, there are chances of penalties being levied. There are prosecution provisions also, which is there. We will not go into it because I think we are running against time. So there are prosecution provisions also. So just to end and just to reiterate that these are very stringent provisions. It is our responsibility as professionals to explain to our clients the importance of these provisions, the importance of these disclosures, and kind of help them not have any bona fide, not have any errors, not have any misses. That's our responsibility. So with that, I think if there's time, I'm happy to take some questions. So thank you for a patient hearing.
Thank you, Saroj, madam, for such a wonderful deliberations and with some of the examples and the case studies, which will help everyone, all the participants a lot. So thank you so much. And friends, I'm happy to share with all of you that on 29 June, we are also coming out with National CA with CA Women Leadership Conclave, which is one of its best of its kind. And we are closing the registrations very soon. And this is a global level opportunity, and having the speakers from global and networking opportunities. We are also launching our women portal for part-time and part-time work and flexi work hours. So, friends, if you have not joined so far, I request everyone to take active participation and enroll. And within maybe 2 to 3 days, we will be closing the registration. Only few seats are remaining. And thank you, Saroj Madam, for your excellent deliberations and your availability in spite of your busy schedule. You have made you available yourself for this session, and I can also see the active participation contribution of C. Amruta Joshi, Hetal Sangoi, Forum, and Maitri. And I think next session will be taken by Maitri, and which is also very, very important on artificial intelligence. And she is one of the excellent speaker. So with this, I am all excellent series and today's 14th episode of this Yashaswini, a successful women. An idol, that is inclusivity, diversity, outstanding performance, and a leader. And this is the symbol of all women professionals. With these words, I wish you a very happy learning and happy return filing season. So thank you very much, and over to the moderators.
Thank you, madam.
Thank you.
Good evening, members. I, CA Amruta Joshi, on behalf of Women Member Excellent Committee, would like to extend our heartfelt gratitude to all the participants, speakers, and WMEC who made today's seminar on foreign income taxation a resounding success. Our esteemed speaker, CA Saroj Maniyar Madam, shared invaluable and insights and expertise. Her presentation were not only informative but also thought provoking. Special thanks to CA Preeti Savla ma'am and Kemisha Soni ma'am. Their efforts in planning this event and ensuring its smooth execution. Lastly, I would like to express appreciation to all of you, the attendees. Your active participation and engagement contributed significantly to the seminar's overall success. Thank you once again for your presence and contributions. Looking forward to future opportunities to dwell deeper into such knowledge. Thank you once again.
Thank you.
Our next session is of Maitri Cheda ma'am. Uh, CA Hetal will give introduction of speaker for next session.
Yeah. Thank you. Thank you so much, madam. Yeah. So now we have the good speaker of CA Maitri Chheda. With 18 years post-qualification experience as a chartered accountant, she is deeply involved in directing USA-based KPO, BPO, and healthcare IT operation, overseeing HR, IT, and fostering innovation. As a DISHA and GMC faculty for ICI, she contributes to shaping future professionals. She has been an active member of the IT DAAB Digital Transformation Committee of WRC for 7 years and chairperson of the IT committee at the Chamber of the Tax Consultant for 4 years. Additionally, she served on the SMS committee of CVO CA and IT committee of Matunga Boarding. From an early age at NIIT, she cultivated a passion for coding, hacking, and technology, complemented by an avid reading habit. Now I'm giving the decks to Maitri Chheda. Please welcome CA Maitri Chheda.
Thank you, Hetal. Thank you for your kind introduction. So there were a couple of, this Preeti ma'am said that, I'm going to be taking a session on IT, so AI. So I just wanted to manage some expectations that the topic allotted to me today was audit your organization. Though I do speak on AI a lot of times, so that's why, Preeti ma'am must have suggested this. With this, let me just start my presentation. You'll have to just tell me whether you're able to see my screen first. Are you able to see my screen?
Yeah, yes.
Hetal, can you help me out with this? Are you able to see my screen?
Yeah, audit. your organization IT capacity, right?
Yes. You're able to see my screen, right? Okay. All right. So now let's start. Okay. You're able to see again, right? The whole full screen?
Yes.
Yes. Okay, great. Okay, so we are going to be talking about auditing our or your own organization. So, as you know, s- even mentioned by Preeti ma'am and even Saroj ma'am earlier before this, we are into tax filing season and then audit season. So, as compliance people, we constantly all the chartered accountants are auditing other people's organization, finding out flaws, what is happening, what not. So the deep question that needs to be asked over here is that are you auditing your own organization, or is your organization well equipped with uh, handling IT capabilities? So basically what happens is that now since the lockdown, or since overall we've been increasingly having relying on IT, or remote working, or everything is digital. So your digital capacities in the office are at your peak right now. So are you auditing that? That's the question we are going to be asking today. Uh, so the session flow would be that what does the law say? So surprisingly, yes, there is a law, of handling the data that we have of our clients. So there are a lot of laws and regulations which are in place. So we will be asking the question, what does the law say and what are our liabilities? Okay. Post that, five major components of auditing any organization, or your own organization would be password management, document management, backup, cyber threats, and email. So these are the five things we will try to cover as many as possible right now. Uh, Over here, just to give you a context of the kind of liability that we have, is that once again, and yes, here we go. So yes, here we go. Okay, so this is basically taken. This whole screenshot has been taken from UN Trade and Development organization. So United Nations, there are 71% of the countries. You can see the map over here. The 71% countries, they have legislation on data protection and privacy. You might be wondering why I'm talking about this. So it will, if you have, just give me a couple more slides and it will start making sense of why this is relevant to us. So 71% countries with legislation, 9% are in the draft of legislation. We are talking about data protection and privacy legislation over here right now. There are 15% countries with no legislation and 5% countries have no data at all. Okay, so over here we see GDPR. GDPR is a European, the whole of European EU, along with UK, have adopted GDPR, which is General Data Protection Rules. And then there are multiple states in the United States which have come up with their own acts. Then you have New Zealand, Canada, Brazil, Singapore, Thailand. You have Germany. Germany is again come up with its own, along with the GDPR common one. China has come up with their own act. Switzerland, South Korea, Saudi, India in 2023. So we had a proportional data protection bill, PDPB bill since 2018. So 18, 19, 20 and 21, we were talking about PDP. Finally, it was adopted into an act in 23. So let's just get a perspective. This will start making sense. Now the Digital Personal Data Protection Act of 2023 provides that following what do you call are the following are the what constitutes as sensitive personal data. So what is the sensitive personal data? Passwords, financial data, health data, official identifier. Official identifier would be your Mr. Miss, your sexual orientation, biometric data, genetic data, transgender status, caste, tribe. So now these are the data which is called as sensitive personal data. Now tell me, as a chartered accountant, what data do you hold over here? Passwords and financial data, right? And also with other identifiers which you may or may not hold as a result of handling other data, but the majority of them being passwords and financial data. This is what we handle for our client, right? So this is why the act is applicable to us. Now what happens is that if you are handling the data, this personal data, this data definition is common for almost all the acts which are there world over. So that's why I give you a global context also. So all the acts specifically say that if you mishandle this data, if there is a data breach or you have mishandled this data, there are some penalties which are applicable to you. So now let's just get into a little bit more of this act. So there are the main terms are called data principal, data fiduciary, and data processor. So data principal is the person to which this data belongs. So if I am a data principal, my data, if I'm giving to my chartered accountant or anybody, so I am the data principal. So under GDPR or other laws also, this is called data subject. Right, and in US privacy law, it's called consumer. So various then defines it in a different manner, but data principal is what Indian law calls it, and many other laws also. Data fiduciary is a person or a business organization that decides why and how to process the personal data. So generally, for example, Amazon is a data fiduciary. It collects the data and processes to make sales and deliver products. Now, as a chartered accountant, if you are also a data fiduciary, right? When you collect data, tax data, financial data, passwords for various sites and everything, if you're collecting all these data on behalf of your customer or your client, you are also data fiduciary. In GDPR, it is called data controller. Okay, now data processor would be person or a machine or any organization that processes the data. So for example, an email marketing company called MailChimp is a data processor. They'll process the data. Income tax site is a data processor where they'll process the data and give the output. Right, so these are the three terms that we need to remember. Now look at the penalties which are there under just this act, the Indian Act. We are not talking about any foreign act, but foreign act has a similar kind of penalties. Just look at the amount of penalties. The breach in observing the obligation of data fiduciary. Just look at this. Fiduciary to take reasonable security safeguards to prevent a personal data breach. So if there is any data breach, what is the penalty that is upon a fiduciary? 250 crores. I kid you not, 250 crores. Up to 250 crores can be levied on a data fiduciary. Okay, for a breach. You can look at any other additional obligation. So main obligation is data protection. So if any breach in if you fail to have reasonable security safeguards, reasonable is the word which will keep on coming regularly over the whole act if you read. So 250 crores is when you fail to take reasonable security measures. If you do not, if there are other breaches, there are penalties to the extent of 150 crore. In observance of data principal, the data principal or the data holder, if they are not the minimum penalty is around 10,000 rupees, and if there is any voluntary undertaking which is accepted by the board, then extent is to up to the breach, the kind of breach that happens. So you just look at the penalties and you will realize what is our implication. Now tell me, what's the risk and how's the Josh? It's very high, right? So let's then just look at risk mitigation. We are risk professionals and we know very well how to mitigate the risk. So let's start with two main important things that we handle of our clients as a data fiduciary is financial data and passwords. Right. So let's start with password management. So the problem of password management. So funnily enough, I mean, I've been talking about passwords, managing passwords, how to keep good passwords and everything since almost 10 years now. They're 10 or more, because I think I started in 2012. So in 2012, when I started talking about passwords, I was talking about how to make passwords, what are really passwords, how to keep them separate. Now I think, over a period of time, everybody is smart enough. All the chartered accountants are also smart enough. So now we're not talking about how to make the passwords or what are passwords. The problem is of password management. Okay, let's get the context over here also. Let's just understand the passwords and their problems. Instances where one needs passwords. You need passwords in your devices, PC, laptop, tablet, mobile phone, e-reader, etc. The kind of devices that we have. Financial applications like banking sites, wallets, demat or trading account apps, etc. E-commerce websites like Amazon, Flipkart, Myntra, Big Basket, JioMart. Then you have email and social networks. You have different emails. You have social networks like LinkedIn, Facebook, Twitter, Instagram. You have personal blogs. Then in compliance, here is where it becomes interesting. You have passwords in income tax, GST, RERA, MCA, and any various other government websites. And non-web based passwords would be, you get tally backup, you get flash drives, you get digital sign tokens, DSC tokens, encrypted files and folders and everything. So you have separate passwords for those also. So in your organization, for example, if you have 20 employees, let's just assume that it's a small organization, you have 20 employees. So at least 20 you could have either desktops or you could have laptops. So you have at least 20 passwords where your systems are employees are using the system. Then you multiply this by different instances. Over here in clients, if you say you have say 50 clients or 100 clients, so you have 100 income tax passwords to be managed, 100 GST, 100 RERA, 100 MCA, 100. Just multiply this into the number of compliances or the clients you hold. So how many passwords are we really handling? So it's a password overwhelm. Now, what are you really doing? How are you storing these passwords? Are you writing it down somewhere? Do you have this putting it up, on a company intranet, or if you have a specific Word file on your document saying that passwords, or maybe you have a Excel file which has all the passwords. How do you manage? Um if you are doing one of these things, these are not reasonable security measures, is what the DPDA Act, the Personal Data Protection Act, is asking you to keep. This is not reasonable. So let us see what is reasonable security. So just for the fun of it, if you forget any of the passwords, it becomes a big problem. Obviously you keep on clicking on forgot password. That's the most convenient thing, but this is not a what do you call strong password practice. Now let's talk about 5 best practices for managing client passwords, only client passwords. Very first thing that you would do is take an informed consent. So what happens is that talk to your clients. What first thing in auditing your organization for password management would be that make sure that you have informed consent from your client that you are going to be handling their income tax, GST, ROC, digital signature, tally backup passwords. You're going to be handling, and you are taking reasonable, you also have to mention that you're taking reasonable security measures, but consent has to be basis of collection, and transparent disclosure method has to happen, where you tell them that this is the intended use for such data. So I'm taking your password and my intended use it to file your income tax return, or look at your ROC compliance, or look at your XYZ compliance. So that has to be mentioned on the consent document, and this also has to be taken. So once you have maybe audit engagements, or maybe just a client engagement from your with your client, this needs to be done. So this is the best best practice number 1. Number 2 would be employees, your weakest link. So your IT is your infrastructure, your information technology is as secure as the weakest link, and the weakest link is the human context. So basically your employees are your weakest link, employees and yourself included. So basically people are the weakest link, the weakest possibility. And let me tell you why. What happens is, many a times there is negligence which is there. Sometimes everybody must have heard about phishing. This phishing, social engineering, and all are covered in cyber threats and security module. But you must have heard about phishing, social engineering, spear phishing. Then you have employees who are using unsecured networks. They are downloading stuff from unsecured networks, so we don't know where they are downloading stuff from. You are sometimes converting something into a PDF, splitting, so your employees are uploading something on an unsecured network, and you have no idea, because frankly speaking, you are busy with your actual client engagement, and you would not know how they are managing or using the client data. Using the same password on multiple sites, that also is a big problem. Not performing system updates and upgrades regularly. Accidental installation of malicious apps. You're trying to download, maybe downloaded a free version of WinZip or something, and then there's a malicious application which is on behind the um, zip file that you're installing. So that could be a issue. Using unsecured data storage, it could be pen drives, it could be anything. It's unsecured. Or maybe uploading your client data on an unsecured or unlicensed storage platform, so that when you're at audit, when your employees are at audit, they are able to download it somewhere. So have you made policies of this or not? You need to audit this, that are one of these things happening or not. Leaving information and devices lying around. So what happens is that you have information, you're maybe working on a client's data, and there's a laptop, and laptop is just lying around. It does not have a proper encryption, it does not have proper password setup. Or when lacks work from home etiquettes, when when employees are logging in from their own devices, and working from home, and then the same laptop is probably used by the child of the employee, and they are downloading something or playing games, and then there's some infection that has happened on the PC or the laptop, and your data has been compromised. So even in these matters, you are responsible, because the client is yours, even if the employee is negligent. Then there is weak employee cybersecurity when remote. So remote, in a remote places, the cybersecurity is pretty weak, and they are not. Maybe you have made it a point that all the laptops in your own system, which you have provided to your employee, are encrypted and everything. But still, when employees in a remote place, and he does not have access to your computer or something, and does not have access to your computer or something, and then when they download or access data from a remote PC somewhere, and your data could be infected, even then you are the one who is liable. So this is the point number 2. So you have to, how do you mitigate this risk? This risk can be mitigated only by keeping the employees informed and aware, and sometimes getting it written from them, getting a written undertaking from them, that you are not supposed to do these things. As a company policy, we do not allow this, and still if they go ahead and do it, it is not your risk. Obviously it is not such, but at least you have mitigated, and you have taken reasonable security measures. Then number 3 best practice would be define and enforce password policy. So you need to define and enforce. So yeah, it has to be defined. Yes, maybe you could say that I have, as a matter of principle, or as matter of defining this word practice, I have made sure in my organization, I have asked all my employees that this has to be done, that has to be done for passwords. You don't share the passwords with anybody. So it's a verbal, but have you have a written password policy where everybody is aware that this is the password policy that has to be happen? How do we treat our passwords? If not, we need to implement one. So let us see. I will be defining what all has to be written inside the policy. You can take notes and have your own policy. We are, yes, as in compliance people, we are good at making compliances and writing policies. So yes, this won't be difficult. I'll give you major pointers of how to write a password policy. So here it is, here it goes. The point number 1 would be that a standard policy document must be actually part of a larger data protection policy document. So you need to have, as an organization, a good data protection policy, which will include the protection of financial data also, how your files are managed, how your files are kept. So we will come to those policies also further in the presentation. But as a part of larger, this password policy document also needs to be there, where you have to clearly mention your firm's view on passwords and their management. Purpose has to be to establish standard creation of strong passwords and protection of that the same. Now, how many times in a particular period are you going to be changing your passwords? When do you have to change the passwords? How your passwords have to be created? Is there a certain theme? Are they going to be easily guessable or not? So all these things need to be defined clearly in your password policy. So let's just look at the policy, and also you need to define the penalty, the scope of the policy, systems and people who are going to be covered by this policy also has to be defined in this policy. And penalty in case of breach by an employee, what would be the penalty? So in case you say that, if I find any employee of mine doing this, when I've specifically said as a company policy, you're not supposed to upload any client data on a XYZ site or any site other than the sites which are defined. So if that is the case, then you can define penalty or breach. Or maybe employees are not supposed to look at social media on their company provided devices, or they're not supposed to maybe install games or anything which is not recommended by your company policy. So what would happen in case there is a breach? That also has to be defined. So now let's look at the policy. General guidelines must be frequency of change of passwords at various levels. There must be various levels, at which the passwords will need to be changed. It could be your email passwords, your software passwords. You might have different softwares which are handling client data. So those software passwords, uniqueness and repetition of passwords also needs to be defined, that where the password cannot be repeated, what kind of passwords must be at what level, that also can be defined. Method of communication of passwords within and outside the organization. So sometimes it happens that you have encrypted a particular file and folder which needs to be the data which needs to be transferred from your place to client's place. So now you need to give out the password. So how are you going to give it out? If you're going to be giving the attachment and the password together, so it is as good as giving the lock and the key together, and any hacker is able to. So it has to be via two mediums. So all that needs to be, you need to probably take help of an expert and define these policies, understand yourself, and also also uh, educate your organization or employees of your organization. Okay, over here, continuing with the policy, password creation. Password creation requirement also you need to define. So you need to define the minimum length, longer the better, specify the minimum length the password has to be for. It cannot be a dictionary word. See, all these are standard best practices that needs to be there. You may or may not, up to you, depending upon, you can take expert opinion and define, but all these things are part of an ideal password policy document. Okay, so it cannot be a dictionary word. It cannot be same as user ID. It has to expire within a certain time limit. It cannot be identical to previous passwords. It cannot, if there's a reset which is happening, if there's a reset which is happening, then that reset has to be, by specified people, or, in the organization. It cannot be outside the organization. People who do not have that access control cannot, change the password or reset the password. Then password deletion, even that has to be defined, that passwords that are no longer needed must be deleted. So the instances where this could happen is when a user or an employee is retired, quitting, or reassigned to a different role, or maybe released or dismissed. So in case of employee leaving an organization or the team, the passwords needs to change. Default password needs to change immediately. So basically you get DSC tokens. So DSC tokens have a basic password which everybody knows. It's a very standard one, which you have 3 to 4 mostly mudra, or whichever DSC provider is there. They give you default token passwords. Those need to be changed, so because then everybody knows what the default passwords are. So that needs to change. Then contractors, retainers, external external consultants, articles, access needs to be removed when no longer needed. Sometimes what happens is that we give, to an external retainer or a contractor, you give access to data for some time, but then you forget to take the access back. Even articles are there for a limited period, right? Once they leave, they still know the whole policy of their organization and are still able to hack in or log in with a malicious intent, or probably without their knowledge something could happen. So that also should be avoided, and that's why the access needs to be removed. So that kind of policy also needs to be defined and enforced. You have to define the procedure and form of communication when password is to be deleted or handed off. So that also has to be defined clearly. Then password protection. So we have spoken about creation and spoken about deletion. Now we are talking about password. We're talking about password protection. So all passwords have to be treated as sensitive and confidential. They cannot be shared. The rules about sharing the password also needs to be given. Then we have rules for storage of passwords. Then you have procedure for reporting suspected or actual compromise of passwords. So how do you find out? Sometimes it happens, that you understand that there has been some compromise that has happened. Password or maybe account has been hacked or something like that. So when that happens, what could be the procedure of reporting the suspected password compromise or anything? That also has to be defined. Then everything, basically all these are the standard documents, standard points that need to be defined in your password policy document. Now, once we have come up with the whole policy, now let us look at actual this of how passwords, how we are we creating strong enough passwords? Are our passwords weak? Are our password making mechanisms right? Do we have strong password policies or not? So let us just have a brief and quick overview of what is happening. So these are the most common passwords which are hacked or were exposed in the year 2024. So 6 months so far, these are the passwords. Now tell me how many of you all have these passwords. I'm sure nobody will agree, but a lot of us have at least 8 to 9 out of these passwords have been used. 1 2 3 4 7, 1 2 3 4 5 6 7. So there are other passwords also. So if you just Google this, and see that which is the most used password from a region, that also will be given to you. You can find out. So these are the passwords which are used. Now just look at the characteristics of weak passwords. So weak passwords would be passwords which are based on common dictionary words. So just for example, if the word is secret, so secret could be reversed, it could be mixed cased, it could be one symbol s, or you just make a dollar sign, or maybe you remove vowels, or any kind of iteration on a dictionary word are common passwords. Okay, we might think that, okay, we're being very smart, I'm reversing the order of my own name or possibly something, and I'm getting a good password or this. But no, the passwords defined are. Am I not visible right now? I'm just getting a notification that my video is off. Is that a problem right now? Okay, irrespective, let me just continue. Yes, the characteristics of weak password. It could be based on common names or pets, etc. You could have a pet, you can have your child or your husband or a spouse or wife, whoever. You just the weak passwords are based on family members or maybe pets or anything. So a person who knows you fairly enough would know or maybe guess the password. So this is a weak password. Password based on common keyboard patterns, like a simple QWERTY or a circle. It is a circle on a keyboard pattern is a characteristic of a weak password. Okay, then password based on user or account identifier. So basically password which is equal to or similar to your username. many a times I've seen in so many CA offices that I have viewed and audited, CA offices that I have audited for password security. I have seen that, your client's password, you usually tend to keep whatever is the PAN number, maybe @PAN number or some character, and the PAN number is the password for that account. So that is a very weak password, and you should ideally not, because this does not constitute as a reasonable security that you have maintained. Or maybe, the characteristic of a weak password would be a short password under 8 characters, which nowadays a lot of websites only do not allow this. And because of that, we are saved that, they do not allow you to keep password. But then there are, sites where you could, maybe your Tally password could be a short password, or your Windows or a login password could be a short password. So that also needs to be avoided. So these are the characteristics of weak passwords. Something more would be something which is very difficult to understand, is also a characteristic of a weak password. So you have a long password, you've attended this webinar, and you've attended this previous, a lot of places you've heard that you have to keep a strong password. So you keep a password which is so long that sometimes while typing you have mistake, or maybe you constantly have to keep on clicking, forgot password. That is also a characteristic of a weak password, because how many ever times you click on forgot password is also a characteristic of weak password, because hackers, there are so many ways of hacking where when you click on forget password, there is a small window where somebody could be spear phishing your this, and or taking away your password, or extracting information, identifiable information from your system when you keep on clicking on forgot password. So that is also a bad practice. Then just as I said that password could be admin 123 or something like that, which is single, or maybe it's all words, or all characters, or all this numerals. Even that is a characteristic of a weak password. So yes, sometimes you follow all the strong password techniques, and then what do? You keep it on the keep it where it is easily found. So that is also a bad practice, weak password practice. Now look at this, to sum it up, this is a meme that has that, I've been sharing since last 10 plus years, 10 or 13 years now, that passwords are like underwear. You cannot share them. You have to keep changing. The longer, the better. Always be mysterious, and don't leave yours lying around. It cannot be seen by others. So a perfect analogy for password. Now let's look at the characteristics of strong passwords. So now I'm sure everybody knows that it's constantly being advertised at so many places that your password has to have at least one digit, letters. It has to be a combination of small case and big, this capital case. Use punctuation marks or a special character. You use a lot of things. So sometimes what happens is that in a zest of creating a strong password, we create a strong password, we forget to store it, or maybe we store it somewhere and then forget where we have stored it, because we know that okay, I have option of clicking on forget password and getting it back. So that is also not characteristic of a strong password. So now we will see how else can you make good passwords. So it could be on a it could be on a passphrase, so basically you have read Shakespeare or something, and you say that no, to be or not to be, that is the question, that is your favorite passphrase. So what you could do is, from this passphrase you can create a password. Or maybe I like to say today is a good day for me. There's an example that I've given here on the slide. So you could derive the password from this. You take first letter out of each each word in the sentence, and then convert something into a special character and make a password. So TIA @GD4F. Yes, Amruta, there's something which is missing. Am I not audible? Hello?
You're audible, ma'am.
Nothing, right? I thought Amrita came to say something. Okay, sorry, let us continue. So over here, now we are talking about creating unique password formula. So maybe, you can create a unique passwords by maybe, just for an example, you and your child like to cycle. So you could say that me plus, maybe I'm saying I love to cycle with my dad. So me plus dad both love cycling, to cycling. Maybe this I could convert it into a smaller or not. So these are the, imagination is the key over here. You could just use your favorite activity and convert it into a password. So I say I love coffee. So coffee, star love equal to amazing. That could be my password. So this is something which is not, easily guessable. It has all the characteristics, and it can, you can shorten this also. So there we will come to, few more tips and tricks where you can create strong passwords. It could be 2-1-1 idea, where you have two words, one number and one capital letter. Okay, so at a random spot. So what you could do is, over here I've taken one or two words, maybe say wolf and a Ludo game. So wolf and Ludo. Then a random number would be 39 and one or more capital. So what I could do is wolf Ludo 39 equal to, I've converted O into 0, L into a exclamation mark. Ludo ka U is in, bracket, and 3 and 9 I have converted into an asterisk. Okay, so now this also could be a password which I will remember, and also very difficult to guess. So this could be your password. Then there are other password generation tips and tricks where you can use sequences, but which are the sequences which are not very common. So you cannot use sequences like QWERTY or something, but you could use maybe, just for example, you could use 4 vertical lines over here, or maybe 3 L's over here, or maybe just, you use it with shift marks. So sometimes it's capital, sometimes it's not, and it could create a password which looks like absolute garbage, but it's a password. I have done that. I have used this, maybe I'll create a M out of it, or W out of the whole keyboard, and then use this. So this also can be done. Now, there's something called lead language. Lead or elite is a hacker language. Over here, what they do is, they have characters which they use characters which look like alphabets. Over here, if you can see M is this, what do you call, a hyphen, a V, and one more hyphen, or it could be a closing bracket, V, and a opening bracket. It looks like M. So something like this could be used as making password. It could be W. If you see, W is series of backslash and front slash. uh, A is something like 4, or maybe a series of backslash or front slash, or at the rate. It could be anything. So you can, create a word, or maybe have a word, and then just replace all the alphabets, or all the alphabets with the characters in lead language. That also can be done. Then there is a technique called munged. Munged basically means modify until not guessed easily. So over here, I've given an example of butterfly. Butterfly could become something very, very, what do you call, not identifiable at all. So butterfly, may you replace B with an 8, then maybe E with a 3. Two T's are there, that I will make it as 2 and T. And so overall, the last final out this product would be something which started with a butterfly, but it is now just a gibberish, which I would know, but the hacker would not, and somebody would not know this whole conversion behind the password. So now we have spoken about how we will create strong password. Now the practice number 4 would be establish a single point of contact. So in your organization, not everybody can have rights of changing passwords. So we will have to probably maintain or define access, where probably top management are also so busy that they cannot be in charge of changing each and every password as and when it comes. Your articles and your clerk employees also would not be right this. So you'll have to define one person who's maybe a IT in charge of everything, and he or she should be the single point of contact for all the passwords. Every password which is there defined should be there. So that would be also best practice for managing your client passwords. Now, fifth would be that, you have a password management tool. So there are many password management tools which are available, where you can save all your passwords, including your, compliance passwords, your bank passwords, your this what do you call mail passwords, credit card data. Everything can be stored in this password management tool. There are many available online. Just make sure that you create a you purchase the license for it. So always remember that any software or anything, if you have a license, you have reasonably secured method. If you are using any free version, it is, as your guess is as good as any others of how secured you might be. You might be reasonably secured but not foolproof. So over here we come to the end of password management side of it. Now we will look at how to manage your data, financial data, or any data that you have of clients and everybody. So you talk about document management. I think we have around 10 to 15 minutes to go. Shall I just quickly go through this? I can maybe cover document management quickly and backup management. So over here, basically, just defining the problem of document management, where, this where we can generate a lot of content. Just let us look at the variety of e-content that a small to medium office in daily routine, what all is being generated. You generate spreadsheets. Spreadsheets, you have balance sheets, projections, reports, working files. You have GST working files and whatnot. You have word files also. You have letters, representations, reports, submissions. uh, Word files are being created for that. You have PowerPoint presentations during seminar, business projections, audio visuals. You have scanned documents for income tax, ROC, e-proceedings. You've received from clients. You have audit trail documents and everything. Then you have emails and attachments, from clients, colleagues, authorities. You receive them. Then you have e-forms and JSON files, for ROC, for income tax, for GST. You have voice and image files also, and you have also backup files for setups, msigner, Java, account software. You have WinZip, you have PDF merger, you have PDF splitter and whatnot. Just imagine the kind of files, the e files that are being generated, multiplied by the number of clients you have and number of instances that keep on happening. The kind of overwhelm that is there of the files is huge, right? I'm sure a lot of you have devolved into you have evolved your own practice of where what is there. But let us identify problems that I have seen in various small offices. One of them is need for document management system. Why? Because see, sometimes you get a call, client has received a GST notice for the first year that was there, in financial year 17-18. That time you had VAT also and you had GST also, and they require some clarification on ITC taken that year. This was 8 years ago. Where's the file? Are you able to find the file quickly? Then there's one more scenario where client sent you some IT assessment detail over WhatsApp or email 1 week ago, just 1 week ago, and has now called you to discuss it. Are you able to find this file quickly? Or maybe data sent over email and WhatsApp. Where's that file? Are you able to find it or not? Then there's one more scenario where your employee is working on certain clients, CMA data or some projection data, and now he's on leave or he's not reachable right now, and he has saved this working file somewhere on his computer. Now, where's that file? Are you able to find in all these 3 to 4 scenarios that I have just pointed out? Are you able to find the file within 1 or 2 minutes or not? So, there is this one quote by a famous CA firm, which is called Guru and Jana. You must have heard about them. So I think Guru or maybe Mr. Jana, he said that, if you're not able to find the file within 30 seconds to 1 minute, in our system, we say that it does not exist at all. You have to be able. So ideally, a best document management system would be where you are able to find the file within 30 seconds to 1 minute, or it does not exist. Now, what happens is, in this scenario, if you do not get the file, what do? No, you start to reinvent the wheel again. On the spot, you'll have to start creating that file, or maybe, just run around, see where it was, what, or maybe ask the client to send the file. In case of an old notice or something, you will probably log into the site and see where it is, what was done. Let us now create a document. Or maybe you have, when you find the file, you have maybe 5 to 6 different versions of that file lying around in the same folder. Maybe there are 5 different folders somewhere. You don't know. If that is the case, you are in requirement of a good file management system. Also remember that a great file management system would help in creating a better backup. And in case of better backup, you are saving, or you're having reasonable security measures or reasonable measures taken to save the data of client in a reasonable manner, so that you are not liable for any kind of breach that happens. Okay, so now let's see. You need to have a good digital document management system to ensure that you can find what you're looking for, even if you're looking for it years after its creation. To avoid embarrassing situation of a client calling you and you're not being able to quickly locate the relevant information document, and to be easily able to locate any document created or managed by your employee who is absent temporarily or permanently. So even your this employees documents also, you need to be able to locate quickly. That is the need for digital document. So this is the need for audit over here. So you need to audit your own organization to see whether these things are being met or not. Okay, so a good file management makes finding what you want very easy. So we will look at the whole stage of it, where any document type is being captured, stored, managed, and shared, how you are going to be able to do it. Okay, so just one quick question. Does your document desktop look like this? If yes, we need to work a lot. You cannot be having such this first rule. First of all, let's just capture 6 basic components of a document management system. You need to be able to capture the documents for bringing them into the system. Then you need to be able to store and archive methods. So define the storing and archiving methods. Then indexing and retrieving tools for such document search also have to be in place. And then overall last comes the security of the documents, where encryption or something has to be there, so that which is again the part of the reasonable document management system, reasonable security measures, so that it does not fall into wrong hands. So now, first question which needs to be asked, this is again your audit question. Do all your downloads or email attachments go to a download folder? If yes, you need to define and make sure that every point of contact, the document has to be saved manually to the place where it is supposed to be saved. It cannot happen that you are saying that, okay, let me just download this for now, let me work on this, then after working I will save it in the relevant folder. If this is a practice you are allowing your employees, then you will never achieve the best of document management system practices. So it has to be organization. Organization is the key. There has to be one place for all the documents in standalone or shared environment. So you could be in a network, or you could be having a single system somewhere. You have to have a single location for all the documents, and those needs to be defined. So it will be easier to run backups and archives later. So, you create for folders in logical hierarchy. It could be, we will look at, how the logical hierarchy can be, had, where what you do is you create a folder, and use plain language to name your folders, and just make sure, and you have to nest the folders within folders, but you have to make sure that you cannot over nest. So basically, if you're having maybe say assessment here, so ideally what I would recommend, it can be, depending upon your organization. So you can keep your files maybe client wise, or maybe you could keep the files income tax wise, or maybe this wise, that income tax various folders, GST various folders, then you have ROC various folders, and in maybe income tax I have e-filing ke andar I have maybe inside of e-filing I will have various assessment years, and inside the assessment years I will go client wise. Probably this is what I would do. You could define it in a very different manner, where you have probably a client folder, and in that you have various GST, this, or you could define that, this is how I would like my data. But you define, and then in that logical hierarchy only the folders have to be created. But make sure that you do not overnest the folder. So you cannot have like, a line of 15 subfolders. If you're doing that, then maybe your strategy is not proper, and you need to reconsider your strategy. because at that point, the subfolders stop being useful and they just start causing problems when you have to keep, if I have to click, or any employee has to click 15 times to reach a particular place to save the document, they are not going to be saving that. They are always going to be, in spite of trying 100 times that, or maybe keeping training sessions for them, they'll not save, because it's not logical, or even it doesn't make sense, clicking 15 times just to reach a particular place. So then you need to look at or reconsider your saving strategy. Then what makes a good folder structure would be the one that, as I said, mimics the way you work. So if you're working client wise, you could have client wise folder. If you're working maybe faculty wise, or maybe you have income tax separate, you have GST separate, you have ROC separate. So what you could do is you can have an income tax folder, and in that various different files, and within that you could have probably years, and within that you could have something. So that could be one method. Or maybe you could have years first, and inside that you could have various documents. So but then your the method has to be unique to your own organization or your own working style. Okay, but you have to make sure that you have to maintain the folder system in a way that everybody can understand. Because one more thing is that you cannot keep on wasting time in if you get new employees regularly, you get new articles regularly, you cannot be wasting your time training these people constantly. It has to be very intuitive, where you can look at this folder structure and understand that, okay, this is how I have to save, right? So just few tricks: that you create a template or flowchart, and think of the folder names as keywords, and keep the folders unique. So basically it has to be, you have to make sure that there is no overlap into your folder, that there cannot be two places in which you could keep the same file. The file has to be, the place where you can keep one file has to be unique. So that way you will have to define the folders. So as I said, you could probably, have e-filing folders, and maybe you could have a working file. So you figure out the top level where I said that, I will keep it income tax separate folder. In that I will keep one e-filing folder, and in that I will keep assessment year wise. So my top folder is income tax. Then I decided that my subfolder would be e-filing, and then e-filing, in e-filing I would have these names. Then I will have a working file where I will keep all my working files, and once those files are done, completed, I will put them in the main folder. Okay, so that is what probably I will do. You can define, but you can have a top level folder, and you have sub folders, and you have to keep a strategy, and that has to be unique for same for all the folders across the faculties. You cannot have a separate for GST and separate for this, then that will create more confusion. Okay, once that you have decided, you could probably keep a working folder, final or archive folder, as I said. Or maybe you can keep a review folder, where you have to review or something. Or maybe you can create shortcuts. So over here, I've given you this, you right click on property, you can tag. So once you tag, searching will become easy. Okay, so this is available in your Windows only. All you have to do is right click on a folder and just tag the folder. Okay, so now organization is done. So half the battle is won. Okay, so now you have to tidy up your file names also. Folders are taken care of. All the folders are fine. But if your file is, like this, project 123, project final. If that is how you are naming your files, this is not going to work. Right? A lot of times this happens, where you have untitled documents, or the documents which are sent to you on WhatsApp. Then you have, WhatsApp named documents, but those are just saved like that. You have not named, you have not even bothered to name. A lot of times you download files from income tax. They have some unique file naming system. Employees, or you yourself or your employees, tend to, just download this as it is. And then you have to keep on opening the file to see what the name is. So the ideal, this what I best way to name the file is that the one that will explain what is inside the file without having to open it. So it would probably have the client's name. It would be what this file is. Is it a income statement? Is it a notice? For which assessment year it is. So the period also has to be there. When was it created? I could just say that, XYZ client name, form 4, for just example, form 4 dash this financial year dash June 24. So I know it was created in June 24. This is the form. This is it. I don't have to constantly open the file again and again just to see what is there inside it. So that is the best file naming convention that one could have. So again, these are the tips on what you have to do. It has to be unique. It has to be indicative of what the file contains. It has to be in line with your business structure. So how you have structured your folders, it has to be in line. So if it is task based for the client or for which month it is due, you could say that okay, this is due. This is probably an income statement which is due in July 24. 2024, then you can probably name it like that. So that depends upon your business strategy or your business structure, but it has to be unique, and all the files have to be then similarly named. Okay, again, how to make this is your file names have to be scannable. Okay, scannable, and ideally, if you do not keep space in between the files, would be great, because searching becomes difficult when you have spaces between the file names. So ideally, what you could do is you could probably keep an underscore, hyphens, or just use camel case. Camel case is something where I've defined it over here. So you could just use case and make your file naming easier, but you would not keep spaces, because including spaces won't work, and usually searching becomes a big problem. Okay, so you might want to keep, you might think that, okay, this is too crowded, let me keep space. But spaces, when you keep spaces, searching becomes difficult. So always remember that, and maybe you could define how you want to keep, spaces. You could use camel case, you could use hyphens, or you could use underscores instead of space. Uh, Tips for good file names: you find balance. I think we are just reaching end of time. I'll finish this and then we will maybe stop. You find balance. You document your system, where you create a sheet where you abbreviate how you abbreviate your names, or the certain form names or specific. You can just keep a sheet where people can see. uh, you define where, how, what you have to do. General rule of thumb is that whatever you want to see first has to be the file name. Okay, so I'll just show you over here. See over here, if you can see, the file name is 1, 10, 100, and it's just haphazardly uh, you know organized. But if I were to create a standard this of 3 character each, all the files have to be 3 characters. So the one would be 001 and not just one. If I do that, then I will get the files in a hierarchy which is easier to scan and easier to organize and easier to search, right? Similarly, see, if you see interview text, we want this. We want AB's interview 1 in which date, AB interview 2 in which date, or not this, AB interview 1 and then Jan 1 something somewhere. This is not probably ideal, because then sorting would become this, and it's not in chronological order. So you have to have standard file names, and it has to work throughout the system. Again, organization is the key. You have to file as you go. Best time to file a document is when you first create it. You cannot say that let me just save this file right now from the client has sent it from WhatsApp, let me save it right now, I will see later. This cannot happen. Your first rule of thumb is that file as you go. The moment you download the file, the name has to be there. It has to go into a proper folder. Only then you will have a robust filing system. You have to order your files for your convenience. So if there are folders or this you use a lot, you could probably pin them, or you could maybe start with a special character or something, so that they appear first in the filing system. And constantly keep deleting the folders which are not required, or maybe files. When you have 4 to 5 versions of the same file, it becomes difficult to later find on which file people have worked. So always make sure that only there is one file which is there on the work. Any old file could go into an old file folder, and then maybe you can revisit it later, or simply delete on the first go. Depends upon how you want to work your organization, but these are the thumb rules. Sometimes you business related files you do not delete, then maybe you can archive them. Do not delete. If you want to revisit them later, you can archive them, but make sure that it is not there in your first folder, the original working folder, so that there is no confusion. So it could so happen that you have a XYZ client's income statement file that you're working on, and then you have 2 different versions of it. You are working on a version 1, and probably your article clerk is working on version 0, or maybe version 2. And then later on, both the versions are not tallying, and you don't know which one is the actual version and which one has the actual changes that you were supposed to make. So that should not happen. So always there has to be one version of the file lying around. Older versions can be put in an old file or archived or maybe deleted depending upon how you want to do it. And then next is backup. Backup your files regularly. Whether you're copying them from one folder to another or whatever, you just set up a regular backup system. So then again, over here, I'm talking about document management system where you have, hybrid or a cloud or on-premises document management systems. There are many available. OneDrive and Google Drive are one of the famous ones. Remaining are also there. All of them have, different pricing system which you could view. Top three that I would recommend, the software that I can recommend is Google Workspace, Zoho WorkDrive, and Microsoft 365. Okay, so over here we come to backup management, but I believe we are running out of time, and so I will just stop it over here and see if there are any questions. Yes, any questions? Anybody? Do I have any questions, Ashwini?
No, ma'am. I think that is done.
Okay, so we will stop here, right? Or do you want me to continue with backup? I mean, because I think we've run out of time already.
If you can just summarize it in a way.
I'll take you through this quickly. Backup management. I'll just take backup so that it will complete the whole document management series. We will probably not continue with email and cyber threat. Maybe that is for some other day. Let me just quickly run through the backup management. So backup management would be, last point where the data is in usable format. There's a disaster. This is a timeline. Last point where the data is, usable format. So you have backed up at a particular point. Then, the time at which the system is recovered. So over here, these are the terms which are there. This is the recovery point over here. How far back is the recovery point and how long it will take to recover. Okay, so what will happen is this is the affordable data loss at this time. So basically, I back up everything every Monday. Okay, and then on a Friday, a disaster occurs and I lose my file. And now, let's say my system is going to be recovered or up in maybe say 5 to 6 days or maybe say 2 days. And again on the Monday, I will have recovered system. So now how much data have I lost? I have lost data of one whole week, because by the time my system is up and running, I'm not going to be able to work on anything. And I have data of last Monday. So am I okay to lose 1 week's data? So that is affordable data loss. And 2 days of working I'm going to be missing. That is affordable productivity loss. So now this we need to define whenever we are setting up our backup. Okay, so maybe this will depend upon the season. So if maybe you're talking about something in a January or a February month, it is okay to have maybe 2 days of productivity loss, because we might not be generating as much of data, and maybe 1 week of data loss is also okay because we might not be working so much. But if you're talking about from April till September, October, you are constantly generating data. In that 1 week that you have lost, maybe in month of July, maybe on 25th of July, if you lose something, you will have lost so much. So at that time, probably your definition of backup would be that I want backup every few hours, so that 1 hour, 2 hours data I'm okay to lose, and I need my system up within half an hour. I can define something like this. And once I define this, my backup plan will also change accordingly. Okay, so this is how you define your affordable data loss and affordable productivity loss. Now going back, you can see this is the definition that I've given, that I need 4 hours of file deleted. I will be able to work on 4 hours this, and my recovery time has to be 2 minutes only. If it is a full system, then I can I have a 5-hour gap, and in one whole day, full system crash can be recovered. Or if there's a malware attack, 1 day is my recovery point and recovery time. This is just an ideal definition. You can define depending upon at what time period you are at, what is the importance of your data right now, and how much you are willing to lose or how much is afforded to you. Okay, so then there are three types of backups: full backups, cumulative backups, and incremental backups. As you can see from the this photo that I've given here, full backup would be everything is backed up and maybe I do it at a various interval. Then there is a cumulative backup, which I, one day of the week, I will back up the whole, I will have a full backup. Then every day I'll have a differential, just today or Monday I have worked this much, only this much backup. Then, as the week progresses, on a Saturday or a Sunday, I will have a full backup again. And again, 6 days of a week. So this is called a cumulative. And incremental would be that every day I will, back up whatever I worked on. And then at the end of a particular period, I will back up cumulative. And then at the end of a month or probably I'll back up full. So this also, again, if you have, ideally it would be good to, hire somebody who's an expert at this and define these systems. Now that you know what all I need to define, you need to go back and ask these questions in your organization, audit properly that how often is my backup taken, how much time will it take to restore the system if at all there's some loss that has happened. We are not going to be able to cover cyber threats, but ransomware is something where a lot of chartered accountants are being targeted, because we hold data of a lot of important clients or high net individuals or big companies, right? And our systems are not reasonably secured, right? So that's why a lot of chartered accountants are being subject to ransomware. So if you have a proper backup system in place, at least 90% of your problem is solved when you are attacked by ransomware. So now there are different backups, full backup, mirror backup, incremental, differential backup. So what you could do is probably, one backup would be all data you have to take. And then in a backup 2, you do just changes from backup 1. And then at the end of the period, you take all data again, right? Now you have one more strategy of where all do you keep your backup? Do you keep just one backup, or maybe you keep 3 copies? Ideally you keep 3 copies in two different formats, and you keep 1 copy offsite. Offsite would be on a cloud. So basically you take 3 copies. One would be in a pen drive, one would be on a separate server or a PC or a hard drive or something, and one would be offsite. Offsite would be on a cloud, and keep it safe, so that in case there of any emergency or any kind of event, at least 1 copy is available to you quickly. There are a lot of backup softwares that are available. The backup features that the reviewers or the people most valuable is backup log. That when have I taken the backup, that log has to be available. The scheduling has to happen. The backup also has to cloud backup is also available in that software. So the reviewers would see, is the cloud backup available or not. So in case you do not already have a backup software in your organization and you're wanting to purchase, these are the features you should look for. Are they compressing the backup? So I have probably 5, 8, 10 TB of data lying around of last 10 years, 15 years, 20 years, and now I do not have that much of space, right? Because space also has a cost to it. So then I need this whole thing to be compressed in such a way that I can compress it, and then when I want to recover the data, I will recover it. Right? So continuous backup is happening or not. Encrypted, the backup also has to be encrypted. So if anybody gets their hand on this backup also, they are not able to make any sense of it, because it is encrypted. The data is encrypted. Okay, so web access is there, web restoration is there, data storage, secure data storage is there or not, and whether they are doing incremental backup or not. So these are the features which are most reviewers or most users value. So now these are the 3 backup softwares which I would recommend. These are, again, you could go for any other also. Acronis is something which the company is there since last so many years, and this is one which is very robust. It also has an antivirus system bundled into it. This is the newest version of Acronis, when antivirus system, the whole cyber security system is also bundled into it. So sometimes if you're looking for something which has both backup and also antivirus, Acronis could be a good one. iDrive is also one of a very good software which is recommended in 2024, and Ninja One also. So with this, I think backup is done. And over here, I should stop.
Yes, thank you, Maitri. Thanks a lot for this enriching session on password and data protection. Everybody nowadays, is taking earlier these things were taken very lightly. Nowadays, because of the cyber threats and all, it is a need of the hour. So thanks a lot. Thank you so much, and thank you everyone who has joined our session here today. Many thanks to Forum, Amrita, Saurav, who has all taken so good initiative and managed everything very well. Thank you so much. It was a nice learning session.
Thank you.